What's going on, everyone? My name is Nicholas Merton here at DataDash, and I hope you're having a fantastic day wherever you are, because in today's live stream, we're going to be spending some time to talk about the not so great pullback in the market here over the past couple of hours. As many of you guys have probably realized by now, Bitcoin's down around anywhere from 5 to 6%, as we've seen a continuous downturn over the past hour or two in price, as it's starting to look like the supposed rally or rebound that everyone was talking about is now starting to fade. I want to spend some time to recap over the broader macro trend that we've talked about here on the channel, give some thoughts as to why I'm not so surprised by this correction, but again, as we've emphasized in a lot of previous videos, why it's not such a bad thing, and what you should be keeping an eye on, which isn't the Bitcoin chart, but rather how altcoins are reacting in this market. Hope you guys are having a great day wherever you are. I can see some of you guys popping into the chat. A few quick things I want to let you all know, but before we dive into the analysis here today, we've got a lot of stuff to unpack. First off, if you guys want to leave a comment down below in the chat, if you haven't already, subscribe to the channel. We do that in order to filter out the bots and other spam that might come in. And second off as well, if you guys haven't already and you want to make sure that you don't miss another video, we've got a really high subscribe rate here on the channel. But one of the things that I noticed is that only 20% of you on average are, in this case, hitting the bell icon. So if you guys haven't already, tap the bell icon to make sure you get notified for every single upload and live stream. That way you'll know you'll be able to get all the updates when they come out on the channel so you don't miss a beat. All right, let's go ahead and dive straight into it, guys. Now, again, a lot of people are worried about the dip here. It's always scary when you get kind of those 5% or more moves in Bitcoin's price. And if you're looking here at the hourly, for example, when you start to see price really rolling over, especially a couple $1,000s in decline from where we were just back here yesterday on the 27th, it can be quite concerning. But as you guys know on the channel, whereas a lot of people, again, and the sentiment shifts so quick in this market, we see people going absolutely bullish, absolutely bearish. We're going to 200K in the next couple of weeks, or super cycle inbound. Or the other narrative is that we're going to be dragging down into a bear market going down to $10,000. Both of those scenarios are not likely. What we are likely going to get is a rally to 200K somewhere in late 2022. But before we get that, as we've talked about on the channel, there's a very good chance we could roll over, that this is nothing more than a dead cat bounce, and that we are going to have to see more pain in the streets. Right? We need to see more pain in crypto markets before we move higher. And I got to tell you guys, even though, of course, you look at various different exchanges, you'll get different volume data. The volume and the pullback we're seeing here is equitably on par and stuff with what we saw here back on the long side. Take a look back here, the daily, right? The vast majority of this supposed rally in price or major breakout has pulled back now. Right? And just within a matter of a couple of hours here. Now, I know a lot of you might be concerned about this and think this is a reason to turn absolutely bearish in the market, and maybe you might see the narrative that I'm promoting as bearish, but I really am not bearish on crypto markets. In fact, what I think we're seeing right now is something that has happened before in Bitcoin's history during this bull market. It is one of the defining factors as to how this market is operating, utilizing massive amounts of leverage in order to drive each and every wave of the cycle. If you look at a lot of the on-chain metrics, if you look at the number of new wallet addresses on-chain, if you look at, for example, the amount of wallet addresses holding a certain amount of Bitcoin, most of these major market metrics are not indicative of a major new wave of users coming into the crypto space. And of course, you have to look at exchange data, and some of that we don't have at our disposal. But what's really been driving these rallies in value are the leverage platforms, crypto borrowing and lending platforms where you can actually borrow more crypto, or basically borrow stable coins or dollars from your crypto assets and go out and do whatever you want with it. You could buy more crypto assets. And that has been a big reason why each and every time we revisit these general previous highs here after a long extended consolidation period, right, we're getting these major breakouts. We saw the second fastest recovery in Bitcoin's history back here from the bear market bottom in December 2018 here towards the summer and June of 2019, a 345% recovery in 28 weeks. A massive rebound, much faster than we should have recovered, and therefore we pulled back, right? And we consolidated for a 70-week period from that previous high, revisiting it back here in November 2020, and that led us from the surge here to 13,000 to 64,000, and we're going and repeating history again, right? We even have an estimated shorter time frame here, because as you go through cycles, consolidation periods should get shorter, and the rallies should get more euphoric, as we can see here, for example, going from 345% to 370%, from 28 weeks to 24 weeks, right? Things happen a little bit quicker, but again, people's patience consensus in the market is usually going to be shorter than what the reality is going to play out on, right? And we can see that here as we've had this drawn in our chart here for the past couple of days and weeks, that we'd probably come down and roll down towards the $30,000 range, albeit maybe at a higher low. Maybe we don't go all the way down, maybe we go to 35K. Either way, we should expect some more pain and some time to consolidate back upwards with higher lows and higher highs over a longer period of time before we eventually break through the previous all-time highs, make that range of previous resistance, new support, and break out higher to test on towards that 150K, 200K target range that everyone's talking about. I don't think it's crazy to assume that we can reach that range. I'm absolutely on for it, but it's going to take time. In the interim, though, I want to make it very clear as to why this isn't a bearish sentiment, because all the while Bitcoin might be pulling back, that we might be seeing a correction in price in the sense of Bitcoin as an asset. Something very unique is going on right now, something that we usually don't see. And I know if you guys have been watching every single update, you guys know that I've talked about this. It's what's going on in the altcoin market, all right? Now, you guys know I have been going back since the beginning of 2021, right? I have been overtly exposed to altcoins. In general, I really don't have practically any exposure to Bitcoin at the moment. Right? And this is something I get asked about a lot in the Dash report. You know, a lot of people are like, Nick, you know, you have no or little to no exposure to Bitcoin in this case, right? Why are you so confident in altcoins? It's like, well, because we're in a bull market. Altcoins generally outpace Bitcoin as an asset. We've seen this through the altcoin cycle index. There are multiple periods of time, and sometimes for extended periods of time, where altcoins will outpace Bitcoin. And if you really know how to pick your cards right, you don't go too risky, but at the same time, you don't go so passive as to just invest in Bitcoin, you can do really well, and you can out-multiply Bitcoin during a bull market, right? So again, we put out our last altcoin video right at the start of the year here as the cycle kicked off. And we've seen ever since then, rather than, you know, as Bitcoin's been kind of shaky over the past couple months since as far back as May, right? We retested the previous highs, we've pulled back since then. Altcoin dominance is doing something very different. It's been establishing higher lows and consistent resistance. And this is exactly what you would define as an ascending triangle. Right? Consistent resistance, higher lows, and we're pressing right up against there, right? Now, this is market dominance, to be completely fair. If you look at the dollar pair of a variety of these altcoins, from large players like Ethereum to alternative layer 1 protocols, metaverse plays, NFTs, you name it, yes, in dollar terms, they're not at their highs. But we generally would expect, looking at history, is that when Bitcoin pulls back in price, we should expect altcoins to pull back even further. Right? Whereas in the bull market, or at least in the positive phases of the bull market, Bitcoin might be up 5%, Ethereum on the other hand might be up 10%, 15%, vice versa. We should usually expect Ethereum to pull back 10 to 15% when Bitcoin pulls back 5%, like we're seeing now, right? Well, let's go ahead and take a look at the ETH BTC ratio. Right? This is exactly what we should be watching, not the dollar charts, right? It's understandable that altcoins are going to pull back in dollar terms than Bitcoin does, but is it more severe? Well, really, we're down 0.25% against Bitcoin for the daily. It almost looks as if there's no market sell-off. In fact, if you weren't looking at the Bitcoin chart right now and we're just simply looking here at the ETH BTC ratio, you might really not know that there's a sell-off going on. Usually, on the other hand, we would, right? We'd usually see it manifest here in the chart. If we take a look at the hourly here, nothing's really happening. And if you take a dive even further into some other random plays in the market, one of them, for example, and you can see here on the sidebar, right, that we're generally seeing a lot of the DeFi coins, one of them being Uni. Look what happened since the Bitcoin sell-off. Uni's popped up against Bitcoin. The dollar chart is not only not affected, it's actually higher from when Bitcoin really started to pull back and the fears started to settle in over the past couple hours. So what's my point in all of this? I think what we're seeing right now in the market is a cyclical rotation of liquidity. There's a really interesting tweet. I wish I would have pulled it up here. Maybe I can actually get it up here for you guys real quick from Raul Paul, where he was talking about, how he said there's a lot going on in crypto, but also not a lot going on, which might sound like a little bit of an oxymoron, but let me go ahead and see if I can get up the tweet here. And I think this is really going to kind of catapult the conversation here and also utilizes a lot of on-chain analytics. So I'll go ahead and pull up the screen here. And you guys can see here, like, there's a lot of great metrics that he pulls up. BTC volume has been stagnant since 2022, right? Averages between somewhere in the ballpark of 15 to 80 billion dollars in volume, right? Now, of course, you might say, oh my gosh, Nick, that's a big difference, right? But we've been in a general sideways channel in the sense of volume during that period of time. And Raul properly points out to that. Active wallet addresses, for example, on Bitcoin have really started to plateau. It looks a little bit scary here. There's really only about 1 million active addresses. Now, I understand there's Lightning Network, there's all kinds of things that people would say, oh, but Nick, what about this or that? What about this and that? That could start to change the data. Maybe people are just using exchanges. Fair point, right? The number is probably higher. But that same argument could be utilized for the past couple of years. Most of those arguments could be utilized when looking at this metric. We should have seen generally the same kind of effect, people using exchanges back in the day and stuff. So what on-chain data gives us, it gives us a picture of about 10 to 20% of the market, right? And will always probably be about 10 to 20% of the market. Maybe it declines a little bit over time, but so there shouldn't be any major anomalies here. What it does show us is that there's a clear trend here. The trend is stagnating. We're not seeing as crazy of growth on Bitcoin as we've seen previously. Now, I'm not here to be a bear on Bitcoin. I still think we're going to be able to see a much wider range higher for price. And Raul even hints to that institutions have been really filling the gap here in the sense of buy-side pressure, right, rather than retail investors. And that's been kind of the narrative for this whole cycle is institutions are going to be getting in, whether it be companies like MicroStrategy to more traditional financial institutions. But what Raul points out to, and I know he's gotten a ton of flack for whatever reason, he has pointed out very smartly that when you look at transaction volume for Ethereum, we're back up to the 2018 highs. We've been holding it here, right? We've been seeing a nice healthy growth here and maintaining versus what we've seen here. Bitcoin and a variety of assets. Active addresses, right? 71 million, right? Okay, so this is the total address count and stuff. Sorry, not active, but you can see your address growth continuing to pick up steam here for Ethereum, right? The active addresses chart holding up quite nicely, right? So the biggest thing here I want to talk about, right, is the market dynamics that make Ethereum as an asset. And I think this is what Raul Paul kind of alludes to. What you generally see is that you've got Bitcoin, for example, as an asset, which its most recent update is Taproot, pretty much went under the radar. Many people didn't really talk about it, and it didn't really add any fundamental value to the supply of Bitcoin, right? That stayed the same at 21 million, and that's a great monetary policy in my mind, right? But you've got Ethereum, on the other hand, that has the metaverse, NFTs, DeFi. It is the largest layer 1 protocol by far. And on top of all of that, its monetary policy is improving. You've got ETH2, which is going to make the switch from proof of work to proof of stake, reducing the supply issuance block by block. And outside of that as well, we've already had EIP 1559 and other network updates that are slowly turning ETH not into a fixed supply asset like Bitcoin, but now a deflationary asset. And a deflationary asset at that can be used for something more than Bob to Alice type transactions. Now, there are protocols like Stacks and stuff that might add more functionality to Bitcoin, but the fact of the matter is that Ethereum has a lot more going on it. You can take a look at a lot of the metrics for the total amount of value being settled over the Ethereum network, the ways that value is being settled, comparative to just the Bob and Alice type transactions, even if you factor in the Lightning Network. And I think it's a big point we need to consider here. The dynamic here is this, that Bitcoin could pull back down here to the $30,000 range, and it could be not because the market sentiment is turning bearish, but because there is a liquidity circulation from Bitcoin to Ethereum and altcoins. We could be seeing for the first time in history, and I think we've been seeing it play out so far. It's a question of if it's going to shift or change. We are seeing what might be for the first time during a severe market pullback in Bitcoin's price, a neutral period or uptick in altcoin value during that time period, where market dominance and exposure of investors switches more towards the altcoin space, or at least liquidity, buy-side pressure is much more exacerbated in the sense of altcoins. So that's the key point I want to drive here. Whether you guys agree or disagree with me, I completely understand if you're on the other side of the fence. It would be an anomaly comparative to what we've seen in history. But boy, has this cycle been an anomaly fiasco comparative to other cycles. we've seen by far a longer cycle than many people expected. Again, back a couple of weeks ago, everyone was championing the idea back in November that we were a month and away from the highs, from the highest up respected data scientists like Plan B, who I really admire and I think has been a big contribution to the space, as well as everyone on crypto Twitter, right? It was practically the entire market. And I felt I was like in the crazy camp a little bit for saying that, yeah, we're probably not going to reach 100K, 200K in a matter of weeks or a month or two, like most people were calling for. And lo and behold, that played out. Along with that as well, it's been a shaky market. We never have had, at least in the previous cycle, we never had such severe mid-cycle corrections like the one we saw back in May and the one that might play out here. I know it's hard to believe. And when people see these corrections play, they think, oh my God, it's got to be a bear market, right? No, it's just that this cycle's different. There's been so many differentials in this cycle. The exacerbated recovery back here from the bottom of the bear market, the first major wave and recovery back up towards around 14K. The second fastest recovery in history. It shouldn't have been the second fastest recovery in history. It is too quick. Because as we expand as a market, it gets more difficult to recover. Well, the reason being is that there was a lot of short squeezes. There was a lot of people trading on leverage, which leads to the exacerbated rallies, but also the exacerbated corrections. It's exactly what we're seeing. And during this chop period for Bitcoin, as it sets up for what I believe is going to be the next major wave here, the quote unquote super cycle that everyone's been talking about, where Bitcoin would go from 65K to 150K, 200K, it is going to need to consolidate sideways longer. We've seen this already once in a longer period of time in the cycle. We are likely going to see it a second time because we've had our first wave, our second wave. The third time will likely be the charm to make things happen. All right, guys. Again, I do want to emphasize that if you liked this kind of core content, we'll dive into some questions here in a moment. Again, I always want to emphasize that if you like this kind of content, you guys can always smash the bell icon. And if you want to leave a comment outside of that as well, just to kind of join in on the chat here live, then you guys just simply have to subscribe to the channel in that case. Again, it's to prevent spam, as we get a lot of bot comments in the crypto space, a lot of scams and really bad URLs. So anyways, just thought I would let you guys know about that, and we'll go ahead and dive into some of these questions here. Let me go ahead and get this up. Savvy Bite said Nick is so wise. Thank you, Savvy. I appreciate it. I've got my flaws, guys. I've definitely made my wrong calls and stuff. I thought in the last cycle Bitcoin would top at $10,000, and well, once it hit 10K, I wasn't wrong that it would reach that metric, but it went on to 20K, right? I've had my flaws, but I got to say in this cycle, we've been pretty diligent about not saying that things are just going to absolutely blow up here in the next coming weeks. And at the same time as well, we've been pretty vehement about the idea that we're not in a bear market, right? You guys probably recall back in May when everyone was really doubting the market, we bought into the market. You guys can go check the May video, and I was on what looked like a very torn up beach, but I was in Costa Rica at the time, traveling back to the States, and yeah, we went in, we bought more on the dip, right? So, anyways, I saw we got a donation, so I want to make sure I get that real quick. Coin Collector said, "Crypto winter is incoming, not waiting this one out." Yeah, I mean, honestly, guys, again, if you're more active traders, and I would say the biggest thing is if taxes are not a concern, then yeah, if you want to, at least I would say this, like if you guys want to know like what I'm doing, and I think that's probably the big question that comes up and kind of answers to Coin Collector's statement. A lot of you might be wondering like, Nick, okay, if you really think that Bitcoin's going down to 30,000, why don't you sell everything? Well, there's two key reasons why I won't sell everything. One, I'm going to go ahead and say the honest thing that most people in the market won't admit. I have no idea if it's actually going to happen or not. I'm pretty confident on it. I'm putting my cards on the table that it's probably going to happen for my next move, which I'll get to. But look, I don't know anywhere else that I'd really want to put my capital. And outside of that as well, considering taxes, considering the fact that I could be wrong, I'm not going to go ahead and just step everything out and try to get 10%, 20% more crypto than I had before. It might sound like a lot, but for the risk to reward ratio, it's not very favorable considering taxes as well. Now, the second thing that's important to note here is that what I'd rather do is dollar cost average in. I'd rather wait until we get a dip in the market. If we do get this 30K pullback and I've got some fiat on standby, I'm going to buy in. Right? And it depends if I've got money on standby to add into the market at the time for my income generating sources. But right now I'm just basically sitting on standby because here's the thing too, right? And I understand these pullbacks can be really scary, guys, but I mean, if we're looking at the zoomed out time frame, right? It's really not that bad. Not to mention, can you guys think, like from this moment on, let's say even you just bought now, and let's say you got caught up in the 30% plus pullback, right? Do you guys know of any asset that's going to go to 150% in the next year, maybe go up to 200%, maybe go up all the way to 200K, which would be 320% from where we are now? Equity market's going to do that anytime soon? Gold and silver, all those gold and silver bugs who told you the collapse is coming soon. Have we been seeing that during, once in a century pandemic event that has completely restructured the world, even more than macro events like World War II? I don't know of any other asset that's going to do that. And that is Bitcoin. It's the base asset, right? We know that there's probably going to be other altcoins that do better here. So I'm not pessimistic. I'm not worried. I love crypto. I come here every day to talk about crypto, but I'm not going to be negligent of the fact that we could see altcoins holding up and faring much better than Bitcoin as we see a pullback in price, and that we might need to consolidate longer for Bitcoin as altcoins continue to garner market dominance and remain relatively optimistic. Could very well play out. Doesn't mean we have to go to 30K, but I think we're going to see more blood in the streets before we see a breakout higher. Anyways, let me go ahead here and I will open up the questions again. I Play Prodigy said, hey Nick, hey there man. Let's see here. Let's see. Tales from Crypto said Bitcoin is a Ponzi. Bitcoin's no more. This is one thing I always try to get clear to people and stuff. Like you have people who will say Bitcoin is a Ponzi or this and that's a Ponzi. Look, guys, if your definition of a Ponzi, right, is basically the idea that people need to keep buying the asset to keep going up, right? Then the equity markets, generally speaking, or any other asset, the housing market, everything at that point would be a Ponzi, right? The proper definition of Ponzi's are making promises to investors with other participants' money and making promises that you really can't keep to, right, if everyone were to basically request those claims. Bitcoin doesn't really promise anything. It's just an asset. Now, if your point is that people have to keep buying into it for the price to go up more than they sell it, yeah, that's true, right? There's got to be more demand than the demand to sell it, right? More demand buying it rather than selling it. That's all asset markets. So I don't think of Bitcoin as a Ponzi in that sense, or at least I don't use that definition. Someone said Data Dash as a Ponzi. And I know sometimes guys, like, look, I always try to keep pretty modest and stuff, like, but I know over the past couple of weeks I've been beating it like a drum and stuff, this idea of like us not reaching 100K or 200K anytime soon. The only reason I do that is because there's so much noise out there telling people so confidently that yes, the super cycle's inbound. They use big flashy terms and stuff to make you feel like it's guaranteed, when in reality it's probably likely not if you look at history and understand that we're going through expanding cycles and understand the dynamics of this cycle versus others. So just an important point to keep in mind. Let's see here. I'm going to scroll through a little bit more. Mirba said, from every YouTuber, you've been the most accurate, most realistic one. Absolute legend. Thank you, Mirba. I appreciate that. Someone had mentioned ban leverage trading. Oh, Ken, I think you brought up a good point, because that's one thing I wanted to talk about here today. And that is the open interest liquidations on the market. We've had, I'm going to go ahead and refresh the page here so we get the most up-to-date data. But when I refreshed it before the live stream, we had, it's about the same metric, about $370 million in liquidations. The highest point even higher than back here on December 13th. The highest point we've seen since back on December 4th, when we had $1.5 billion in long liquidations, if you include shorts as well, another 400 million. But yeah, I mean, guys, I think it's just because this is a big trading lesson I'll share, and I think we can maybe even wrap up the video maybe as we come up here. I know a lot of people immediately started getting confident once they saw a couple bump ups in price, and I do like this trend, right? Seeing higher lows and higher highs, that's always good. But a key point to understand is that there's no guarantee, right, that is just a clear confirmation that things are just going to start breaking out higher, right? You want definitely a longer track record of price to be able to know, yep, we're going to start really seeing price moving higher before we get too confident, right? Right now, if you really zoom out and realize where we're at, and this is what we've been trying to talk about for the past couple of weeks, we're in the chop zone. We are not in a clear trend right now. I don't think this is a double top that is signifying an absolute bear market, but at the same time, I think we've got a good chance to come back down to this lower band here, like we were back here between late May into July. I think that's the realistic outcome. And many people aren't willing to say that that is going to happen. But I'm not here to give you guys comfortable answers. I want to give you guys what I feel could be the truth of the matter. What could be the more likely outcome. Now, I could be wrong, right? I'm very candid about mentioning when I'm wrong here on the channel, but I don't see the sentiment that everyone keeps championing is right around the corner. It feels a little bit too hopium driven. I want to know what other, just think back over the past year, the narratives we've been told about corporate treasurers. Where are the corporate treasurers? MicroStrategy is still buying some Bitcoin. Tesla bought some Bitcoin, but where are the other companies? Where are those waves of institutional investors that were going to come into the market? Where's the spot Bitcoin ETF that we know is probably going to be the catalyst that drives us up to 200K? I haven't heard much. So that's my key point here, guys, is I don't see any fundamental catalyst, and I don't see the technical price action that gives me enough confidence for us to just start climbing up here, breaking out, and going up to exacerbated levels. But the good news is during this pullback, there will be some time to make some money in the altcoin market and to be able to increase our Bitcoin comparative, which is always good. It's not just important to outpace the dollar, but it's also important to outpace Bitcoin as an asset if you're actually actively trading the market. If not, why not just buy Bitcoin? Right, of course, diversity is important, but I hope you guys get my point on that. All right. Well, I will go ahead and I think I'm going to wrap things up here, guys. I really appreciate all the kind comments. I also got some questions around, gold and a couple other, sorry, not gold per se. I was talking about commodities, around altcoins and a couple other plays. I saw one last question about Cardano I can dive into. To be honest with you guys, I'll go ahead and pull up this chart here. This is the chart that you should keep an eye on. 88 ETH. Cardano really has not performed that well against Ethereum in this cycle, right? Unless you bought down here in the consolidation range, you are up a total amount of 69% against Ethereum. That's still good. That's nice, but it's nowhere near the heights of performance it had earlier on in this cycle, and that is pretty apparent here because we saw it break through the previous resistance line that should have become new support. There was multiple breakthroughs below there. Third time was the charm we broke through. And honestly, whether it's on a fundamentals basis or in the sense of adoption and building on chain or price, it just hasn't been very exciting. Now that it is on the lower band, I would say having some exposures, it's not a bad time to maybe get some exposure, but to be honest, I think Ethereum is going to be really stealing the show here for the next couple months. Just like we've seen in the previous waves, Ethereum kind of shines first, and then we see liquidity trickling out towards other plays. So anyways, guys, I've rambled on enough. I know you guys are probably looking to have a couple of hours tonight without me rambling on about crypto markets. The only thing I ask is that if you like this video, please consider dropping a like. And as we mentioned earlier, if you haven't already, smash the bell icon, subscribe to the channel, share this video with family or friends. That's the stuff that really helps out the channel, guys. And if you're interested to get this kind of macro analysis on a deeper level, where I'm not rambling 24/7 and you can take it bit by bit, you can also subscribe to the Dash Report, which is linked down below in the description. It's a good way to support the channel. But even if you can't, no worries, guys. There's lots of more great content coming here on the channel in the future. So I want to start by saying thank you all for joining into the video today, and I'll see you all in the next video. Take care, everyone.